All right. Hey guys, give everybody just a second to get on. While we're waiting for everybody to get on, I am joined by Evan Einhorn, another exclusive with the man himself, with Modern Home Lending. Actually, it's his company, Modern Home Lending.
Yeah.
And what I want you guys to do, besides giving a big shout out to Evan, is make sure you go up on your screen, click the three dots up in the top right, and there's a little follow section there. Make sure you follow us. So you'll see all my crazy stuff during the week and stuff that I do Facebook Live with. But every Wednesday, you can get alerted for our show every Wednesday at 1:30. Okay, so you'll get a little alert from that, and make sure you don't miss it. Or you can always watch the replay later here or on our other Facebook page or YouTube. So make sure you do that. So follow us, share this with friends, family on Facebook, other platforms, whatever. Make sure you share this right now. Share it. Go ahead and share it, or after the replay, and ask questions as we go along. Don't be afraid to jump in and ask some questions. Okay, we want you guys involved. So that's what we're here for, right? Today we're going to be talking about interest rates, and we're going to make it a little fun though, so it's not too humdrum about the detailed numbers and stuff, and get into what it means for you, which is why we're doing this. And Evan is going to talk first of all about interest rates and today's rates and the environment and why it's important to lock those rates and how we can make that happen for you.
Yeah, no, I'm really excited about it today because we have a pretty big announcement that, in the past, 10, 12 years ago, it's been able to happen. But, again, lenders are starting to ease up and there's some cool products out there. But, today's interest rate environment, I literally just sat with someone today that was shopping for a home last year and they bought, thankfully, last year. But they're like, when did the interest rates jump up above 4%? And I'm like, well, that's been happening over the last, 7, 8, 9 months. So they've definitely been on the upward trend. If you talk to any, top, finance person or anyone in econ, they will, tell you that rates are expected to continue to rise. But, you can Google that. You don't have to take my word. So it's an interesting rate environment. Chris, I mean, you've seen like some pretty low rates over the last 4 or 5 years working.
Yeah, and correct me if I'm wrong, but ever since the Brexit, which is not an every year occurrence, right? So we're talking about a year and a half ago now? The Brexit?
Yeah, 2016. Yep.
Yeah. So we saw a big dip, and we saw little tiny dips, but for the most part, since that big lull, we've been kind of on the uptick, right? For at least the last year.
Yeah, especially in 2018.
What's that?
Especially in 2018.
Yeah, so exactly. So, and that's as the economy improves, more people get back to work, all that stuff. Maybe we like our salaries to be a little bit more, and I think that'll catch up over the next year for a lot of people as companies get caught up on all that stuff. But as the economy gets better, interest rates go up. Correct? I mean, that's kind of the simple way of looking at it. There's other factors, but and that uptick has been a total of about what since Brexit, would you say? Almost 1%, total percent? Almost?
About 1% or so, depending on the loan. So, and that makes a huge difference in people's monthly payments. And the tough thing that I have is sometimes I'll pre-qualify someone in July and I'll quote them something, hey, here's today's rates. But then a couple months down the road, it might not be that much higher, but it's still higher where, hey, your payments are $20, $40, $50 a month more in a payment, just over a couple months. So that's where we have a new solution that I'm excited to share today that you can kind of shop, and, have that peace of mind. So
So with just real quick, so with that 1%, they're looking at basically how much just in that interest rate? You said about $50. Is that what you were saying in a monthly payment?
I mean, that would be on a super small loan, but running the numbers, on a $200,000 mortgage, if you were at 4%, you're just your principal and interest, your monthly payment is $954.83. And let's say rates rose to 5%. These are all hypothetical. Your payment would jump to $1073. So that's about $120 for just 1% on a $200,000 loan. If it jumps even higher, if you have a bigger loan, we could recalculate those numbers. But interest rates impact your payments more than throwing an extra few thousand towards the down payment doesn't do a big difference. Interest rates are a huge factor as far as your monthly payment goes. So,
and now when we're looking at the way the home prices have been going up because of the shortage of inventory over the past year or so, and we factor that in, that makes a big difference too. I mean, people are probably looking at somewhere around a couple $100 difference from one year to the next, the way from last year to this year, right? So
yeah, potentially.
And that means, for the people who are waiting for the perfect credit or the increase in pay maybe in 6 months or whatever, what would you say to that person so we can apply today's interest rate? And the next question, of course, is what is today's interest rate, Evan?
So, that's a good question. So I think we discussed it once on the show before, but, here was a quick stat that, I had a client, they were shopping for an FHA mortgage. And I had a client that had just above a 580 credit score that got towards the end of last year.
Yeah.
But they got a better interest rate than someone that would have like perfect credit in the high 700s today. So it just goes to show, I mean, better credit scores definitely get you a better deal. But as far as, how much of an impact of that is that in the grand scheme of things? Well, a few months could change that. And thankfully, we have a resolution for that now. So I'll kind of announce that. But Chris, I mean, you've seen people shopping over a couple months and, there'll be a little swing in interest rates. And again, not a huge difference, but it's kind of a bummer when you go under contract and, or you're writing an offer and, what was a payment at 90 before, now you can only afford 180 and it's only been like 2 to 3 months. So
I always tell people, look, it's unpredictable because anything can change in the market or in the world and like with Brexit or, war or whatever the case may be, right? So if the interest rates are historically low right now, whether they're 3.5 or 4.5, do it now if you can do it, right? If you can qualify and get the house you want, do it now. Are you going to be able to outpace the interest rates and the home prices going up? That's a big if in my book, unless you're going from, some sort of menial position to, extraordinary position when you look at about a couple $100 difference per month or possibly a couple $100 per month difference in payment.
Right. And that's something, we've looked at with clients. Hey, where are you at now? Where could you be at in the future? And how much of a difference does that make?
And not only the payment, right? But what they could have gained in equity and locking in a lower payment to begin with than, where they would be at. So tax benefits.
So the cool thing I have to announce today is our new rate lock and shop. So rate locking and shopping, it kind of, home buying should be a fun process. And, I think I have a lot of fun with it. I know, Chris, you do with our buyers. A lot of people think it's stressful, but honestly, if you're educated and you do everything right up front, it could be a fun process. But one more thing that we've, partnered with a lender to do is now we're able to lock in your rate for 60 to 90 days while you go shopping for a home. So you can have rest assured, even if rates go up, you're protected and that rate you locked in is still there. If rates go down significantly, there's also the option to potentially drop your rate. So it's kind of a win-win. So anyone that has a down payment and whatnot, like definitely beneficial to look into this, especially if you're going to be buying in the next 2-3 months, because it's a great feature. And I think we've seen, like, a lot of people do take a few weeks to go find a home and whatnot, but this way you can know, hey, this is exactly what my payment's going to be. It's not going to be adjusted because I've already locked in a rate with Evan and Modern Home Lending, and we're golden. The other thing too is lots of our clients, like, we can help cover closing costs. So you've seen that on closing statements, right?
Yeah.
Chris? So the other thing that can help us do is, hey, we've locked in a rate and we know Evan is going to help us get X amount of dollars in a lender credit to help cover our closing costs. So when you're making an offer, your rate is already locked and you know exactly what you're going into it. With that being said, like, day to day rates change slightly from one day to one day, but 30 or 60 days, that could be a lot bigger difference for sure.
Absolutely. That is awesome. That's awesome. We're super excited. Guys, the other thing too I want to say is I'm actually meeting with a client later this afternoon, and it's so cool now because Evan, with his new brokerage, is super competitive even with home builders. What I mean is, so he's got everybody, a lot of people maybe heard of down payment assistance programs for starters. A lot of them start at like 640, 660 credit score. He's a 520 to 620. Or 580. Then, or 580 to 620. In that range, you can get some or all down payment taken care of. Also, there's no lender fee. He doesn't charge any lender fees. So what does that mean? Well, a lot of times you get the incentive from the builder to, go into, their whatever it is, 2% or whatever. But what I'm finding and showing my clients is that, well, with Evan, it doesn't mean anything because he's already $1,000, $2,000, $3,000, $5,000 ahead of them on those concessions that they're giving you.
Right.
That, but he can qualify you sooner also, on top of giving you as much or more typically. Maybe not in every case, but it seems like so far it hasn't been a problem.
I love looking at it with builders because a lot of the builders, their mortgage companies are bigger companies, slightly higher rates and fees and whatnot. We have no processing, no underwriting fees, and like you said, if they're offering $5,000 to help cover closing costs, well, we potentially could do the same at a potentially lower rate, which means a lower payment for our clients. So we're always, I'm always looking to compare apples to apples and kind of get rid of the smoke and mirror effect that you see, and just really get down to the nitty gritty of what are you actually getting, because at the end of the day you're getting a mortgage, and a mortgage is a mortgage is a mortgage. Like, you're getting a rate and you're paying fees for that.
So how does the rate lock work then, like with a new build, Evan? I mean, how would there be an advantage there?
We have some lenders that will lock in rates for 180 or 210 days, and that's something that I'll review with clients to say, hey, because those are a little more expensive, locking in for that long. Is it worth it to be conservative and do that, or should we wait till we're a little closer? So that's something I look at with clients. This, I think, is going to be way more beneficial for the clients out shopping that haven't found a property, because most of the lenders I know, actually all except for like 2, require you to have an address to lock in the rates. So this allows you, hey, I just got pre-qualified with Evan. I'm going to be out shopping with Chris and Cindy maybe. And hey, I might not find a property for 1, 2, 3 weeks. But at least peace of mind. I already locked my rate in. We already talked to Evan about that. We know what our payment's going to be. Now we just got to find the right home and the right price.
So one more time, how fast can they lock that rate?
So once you're pre-qualified with us, go through an application, we get documentation, we can lock in a rate, 60 or 90 days. The 90 days is slightly more expensive, but if you think it might take a little longer for you to find a home, it's not that big of a difference. And you have that peace of mind that, if you lock in that rate now, there's a very good chance that your 90-day rate lock will be cheaper than the shorter rate lock once you actually find the home. So
So what does that mean to everybody who's maybe 30 days to 6 months out? What should they be doing right now with you?
Yeah, no, talk to me so we can figure that out, because I have a lot of clients that I'm going to be locking in for 90 days because we know rates right now are pretty good compared to the past few weeks, but overall they have been on an upswing. So this way we have that peace of mind. Again, it's just one less thing off your plate, and it's more of a guarantee, peace of mind. You don't have to worry about, hey, what's the market going to do over the next few weeks while I find a home? You know what I mean?
Right.
So
Yeah.
and
Cool.
you might not be ready to buy now. You might be ready to buy in in a month or two. So this gives you the peace of mind. So yeah.
So again, some of the benefits then of locking in would be obviously we're looking at lower rates, saving some money. Anything else that they can do? I mean, obviously, the sooner they talk to you, the better, because then if there are any credit issues or you see something in what you're simulating or manually underwriting, you're able to be like, oh, if we do this, we're good in 30 days. Let's do that. That makes sense, and then lock or whatever. Right.
Right.
So you can kind of map all that out from the get-go, and they're not guessing, thinking, oh, well, I'm talking to a credit guy, but he's not a loan officer, right? Or a broker like you, so he doesn't really, not really getting them into the mortgage world necessarily, even though he's improving their credit. You may have some things that, you would do differently to get them a better rate, to get them.
Because we look at a mortgage credit score. So if there's something we can do if there's credit advice that we can give to help you possibly get a better rate or whatnot, we're more than happy to, give that advice and credit education and credit information.
Cool.
So
awesome.
No, I'm really excited about this. I know a lot of buyers are going to use this, and it's going to make a lot of people's, payments lower just because we're locking in now. We don't have to stress about where the rate's going to be in 60 days once I close on property or whatnot. And we can always lock with an address. This just, hey, if you find a house, maybe you don't get that house, you get the second house or whatnot. Like, you don't have to worry about the rate lock. You know exactly how much money, you know exactly what your rate is, your payment is, etc. So it's great.
Awesome. Well, that sounds like a lot of fun. It makes the home buying process a little less stressful too. Guys, if you have any questions, jump in. Evan, anything else you guys you want to add for our viewers right now that would be important to know about?
No, I spent just over an hour on the phone with someone going through an application. They had tons of questions, but they were just curious about credit and whatnot because they had missed a couple payments a couple years ago. But I can tell you that she walked away knowing so much more after that phone call. So, wherever you are in the process, Chris, you and I, we're always willing to talk to you, and we're always willing to give you information on, hey, you're 6 months out. Okay, maybe we should wait a little, but here you can think about these couple of things while you're doing that. Hey, you're 60 days out. Maybe we should look at, rate locking and then going shopping for a home. So I'm excited for this lock and shop program, but I would say start the conversation early so you're prepared when you're actually going through with it.
Cool. All right, guys. Well, I don't see any questions. I see some people watching. Glad you guys joined us. If you guys have any questions, though, how do they get in touch with you, Evan?
Yeah, you can go to modernhomelending.com. Again, modernhomelending.com, or give us a call, 602-456-2273. That goes directly to me. So you'll talk to me and I can help you out.
All right, guys. And of course, you can reach us at 480-788-8569. You can call or text Cynthia and I there, and the Mincolla Group with West USA Realty. Also, you can check us out online at mincollahomes.com or mincollagroup.com. And we're here every Wednesday, 1:30. If you guys have any other questions, just post them here. We'll try to answer them, or feel free to reach out. We'll talk to you guys soon. Thanks a lot for joining us.
Come. Thanks. See you later.